with today's
This
program.
meeting is being recorded.
Okay, so before we start, I would like to begin by acknowledging that we are in Treaty 1 territory and that the land on which we gather is the traditional territory of the Ashinabeg, Cree, Oji-Cree, Dakota, and Dene people, and on the homeland of the Red River Métis Nation. First off, CFA Society Winnipeg has served the Winnipeg investment community since 1952 by promoting ethical and professional standards within the investment industry. Our society is an active participant and innovator within our international organization, the CFA Institute. We are also a member of the newly formed CFA Societies Canada, which promotes advocacy efforts to our regulators. In addition, CFA Society Winnipeg provides our members with professional development and educational opportunities, job placement services, and membership networking events like today. So we definitely have an exciting hour coming up. So without further ado, I would like to introduce you all to our moderator for the panel, co-founder and partner of the Canadian Association of Alternative Strategies and Assets, James Burron. James currently sits on the Canadian Investment Funds Standards Committee and is also called upon by membership and industry groups to speak to risk ratings and portfolio placement of all types of alternative investments. James has been kind enough to grace us with his time to moderate this panel and introduce us to some of our panelists for today. So James, I'm giving the ball to you.
Great, thanks, Erica, and thanks to the Society for organizing this. It's we've done a few events actually in Winnipeg. I don't know if you guys know, my family's kind of from here from about 150 odd years ago, and it's always great to get back in town. Of course, I was from a little smaller, tiny town called the Paw way up there. But anyways, enough about me. Let's hear. We're going to hear a lot from our panelists here, Ella, Neil, and Ranjan. All of them have done this before, and we're gonna try to keep the time to get you out about 1:15. If people want to stay longer, I think we can go to 1:30. But I've got a short introduction to the industry. And for my years, I've been working with associations, whether it's CAIA or AIMA or CASA for the last 15 years, and kind of seen how things have progressed. So we're going to go on that. We're going to have this slide later at the end too, so people can if you're going to pose questions, to go to the right person. So here's what you need to know to make it in the alternative investment industry. This is it. This is the golden presentation right here. So I don't know if we can, maybe Erica, maybe you can define what a hedge fund is, or somebody. Usually we ask the students to define what a hedge fund is.
I think any of the students can give an answer if they want to. So.
I don't know if I can see everybody on my screen here.
There, someone's raising his
Okay, go ahead. Abhishek, yeah.
Abhishek.
Okay, hi. Thank you so much for this presentation. I think a hedge fund is basically a fund that uses like techniques such as buying low, selling high, and then various other technical analysis as well as fundamental analysis to beat the market and get extraordinary return. And there are a lot of different strategies that hedge funds use, and they generally don't disclose that even to the investors, what their strategies are in a very proper way. So that's why I think it's kind of risky, but at the same time, they give a higher return.
Okay, very cool. Pretty good, yeah. I mean, I say it's what we typically hear. Like, it's unregulated pots of money that are rolling around the world and destabilizing, vast nations like the pound. When I was going to school, 92, a million years ago, although not a million years ago to our panel, the pound sterling was taken off its pedestal, and George Soros made $1 billion or euros or whatever it was at the time. So that's what people thought hedge funds were. They really were kind of back in the 70s, 80s, and some of the 90s. Leveraged, they're using things called LSD, leverage shorting derivatives. And, everybody makes a ton of money at them, and it's only for the privileged few. Some of those things are true, some not so much. So I'm just going to give a short, actually informative description of what hedge funds are. In Canada, they're regulated exactly the same as any sort of asset manager, except for private equity and venture, because they're investing in actual companies. So they opt out of the securities regulation. But if you're trading in public securities, you've got to have your proficiencies. You got to have your CFA level 1 to be a portfolio manager in Canada. It's a law, or possibly the CIM. But really, if you don't have your CFA full 3 years, then they kind of ask, well, what are you doing? And then there's also this Canadian securities course and other requirements, capital requirements of about $100,000, which actually you probably need about $500,000 to start a hedge fund. And then there's a lot of compliance audits, and you have to have a compliance officer that's impaneled. So there's a lot going on behind there where they are regulated very much in Canada. And typically they're offered by something called offering memorandum. All the things you don't learn about in school is this stuff here, which is basically a fund that can do anything, literally. And now there's ones that are offered by prospectus or a mutual fund. And so I'll get into a little bit of that here. I'm not going to, this isn't like my liquid alts talk here, but there's a lot going on there. Typically, the liquidity of the fund would or should or might mirror the liquidity of the underlying. So if you have distressed debt, you're not going to have it in a daily liquidity vehicle. And if it's futures, you really shouldn't have it probably in an annual redemption vehicle. So those types of things are typically mirrored. So it's and secrecy, there's a lot of information that investors get, a ton, depending on who you are and what kind of fund it is. And as Abhishek said, I mean, sometimes their trades or their strategies are proprietary. Sometimes people wouldn't figure it out even if you told them. I mean, they're very complicated. So there is a bit of a mystique or veil there. And then, leverage is about 2.5 times in globally gross leverage. Canadian funds are typically lower. We can talk about that a bit. Returns are similar to market. I'll go into the returns of risk actually later. Actually, that number in the bottom is not quite right. So Canadian hedge funds were about 30 billion, and they didn't go there. They haven't changed really since 2011. But actually, the liquid alts is not 11.5. So I didn't update this. It's actually 20 billion. So in the last 3 years, the Canadian hedge fund market has grown by about 40%, by about 60%. So, and that's because of this legislation that we worked on for 6 years, starting in 2013 and then being promulgated early 2019. And that's a game changer for Canada. It's a huge deal. We're still punching way below our weight in the alt side, in the hedge fund side, but there's a lot going on there now that really didn't happen before because of distribution. You couldn't sell it to everybody in the country, which in Australia, every mutual fund can do unlimited, all the leverage and shorting and derivatives they want. They don't even know what a hedge fund is. And they haven't blown up in the last 15 years. So we kind of wonder why are there so many restrictions in Canada? Probably because it's Canada. Okay, we won't get onto that too much. So like I said before, it was only the 1% of the population. Liquid alts are here for everybody, these new prospectus funds. I mean, Ella and others can talk to how much hedge is being used by public pension plans. Many of our biggest plans are Maple 8+2, as I'd call it, including OP Trust and UPP now, University Pension Plan. They've been using hedge funds and hedge strategies for a very long time. They wouldn't put it in their annual report for all the teachers saying, oh, we're in the hedge funds. They'll say we're doing sophisticated trading strategies within equities and bonds, and that's really what it is. And they're also they have a whole Maple model. I have a whole Maple model of conversation as well. If you want to get a job there, they typically don't have HR departments. Usually, I mean, there's larger shops like Picton, of course. It's running, 3.5 in liquid alts alone, 3.5 billion. They have an HR, which Neil will probably tell us about and how to get into that. But typically, they're 5-7 people. And so if they're hiring somebody, it's going to be by word of mouth or someone that they've worked with somewhere else, or you just come in contact with them. And it's some of them are still kind of cottage industries, like 5 to 20 people, which is good and bad, but it's growing for sure. And the largest might have 60. I think Picton has a lot of long only as well, so it's a bit different as a hybrid versus like a purely hedge fund one. In Canada, these numbers are pretty dated, but they're so indicative. God, if you lop off the top of that right chart at 14%, because we don't have many funds over $3 or $4 billion. We are a country of small hedge fund managers, but everywhere is. But the $5 million manager, at Portage in Maine, there's another $4 million US manager in Connecticut. There's a £3 billion manager in London, but you never hear about the £3 million manager. You hear about the $37 billion manager. So we always think we're a bunch of small managers, and it's the same around the world. It's a very similar stratum. AUM amongst the managers. So yeah, I never really get too hung up on us being like this small manager country. And then I'm not sure if I have the chart here, but actually there's 4 managers that run about 80% of the liquid alts money in Canada. And then it's the same in the hedge fund land too. I mean, there's the larger managers control a large amount of the money. That's how every business works, and they do move around. Like top quartile of size moves around and stuff like that. But you know, it's just like every other business. So whether it's restaurants or you know, really anything. These I'm trying to get new numbers from Bull, but I have some more. So you can, this doesn't really tell you a lot. The light blue is the TSX total return. The dark blue is the hedge fund index, which is about 400 funds out of Bull Wealth, and the market neutral are the ones that don't have any directional bias in them. And you can see there's a lot less volatility. You actually see it better right here. Here's the red line is your market neutral. Not a lot of return, but not a lot of risk. And the hedge fund index looks like a little bit less volatility and a very similar return to this time frame. And you can see from, actually I'll go one more ahead. Here, the red is risk, okay? So look at the second from the right, TSX composite total return. That's the one that was this red line, this light blue line. You can see the risk is double that of the hedge fund index and way more than sorry, it's double the yeah, and actually we don't have the other one here, but so yes, your hedge fund index is half the risk of your S&P TSX. Now, say you know risk is additive. Say you just doubled up and you bought twice as much. You'd have a 15% vol in your hedge fund portfolio. You know 6.5 plus 6.5 minus your financing costs, which is going up by the day in Canada and US. But you know then you'd have your return. So that's one part of it, is that some people can lever the lever, or they can just take the lower volatility. And even within strategies, you can see the only one that even approaches is the one way, the actually directional way on the right is the only one that even approaches this 13-14% that's given by the broad markets that everybody thinks is just the market, and it gives you your market volatility of 14%. Everything else is lower. And so you go to market neutral, you look at 3% vol, and you know decent returns. So the blue lines move around a lot more than the red ones, but you can see there is a story to be told here about how the volatility and returns of hedge funds have performed over the last few years in Canada. Yeah, so here it is. This is actually kind of weird. Like we usually don't have the blue lines in the bottom being so odd. So maybe we'll focus on the top, because look at your beta, which everyone knows beta is. I mean, you got about 1 for equity directional, of course, because it's a lot of long positions and a few shorts. Maybe it's 150 long and 50 short on a ratio. So you left with a beta of 1, and then the other ones are a lot lower. Look at managed futures. It's this little hair, nothing. A lot of them are quite low. This one actually is higher than I typically seen. Usually it's the highest ones would be like around 50%. This one peaks out at about 70% with equity long short. So there's a lot to be said for your correlation to your typical portfolio. So, you know, if you had something in bond land, wouldn't you want to replace your equity portfolio with some hedge funds, because your correlation with the bonds you're still holding is very, very low, except for global macro, which looks really anomalous. But part of that is because their collateral is in treasuries, and also they're typically trading rates and currencies, which I guess are correlated to the bond index. So there's liquid alts. Like I say, I have a whole deck on this. God, we're going to T+1 trading. So if you buy a hedge fund, you might put the order in on the 15th, maybe, and you'll get the price on the 1st for the following month. And then when you want to get out, you got to give them notice, and then you get the money 3 weeks later. Takes a while. With the liquid alts, this stuff trades on FundServe just like any mutual fund. CFA 101, I buy that mutual fund, I sell it the next day, done. They both trades will settle in 2 days. So and also there's a thing called a risk level, which again you probably don't go to in school. Like there's risk levels at the IROC dealers of every security and every portfolio and every investor. So The offering memorandum stuff is given a high risk, which means very hard to buy for little old ladies, so to speak. And even if you have a risky investor, aggressive investor, you can't buy that much of it. But with these ones, if your risk is like, it's based on volatility under the IFIC score. So even if the volatility shows it's going to be medium risk, you might say it's medium high, and you can still buy a good chunk of it for your clients. Or if it's a low medium risk, you place it as medium. The fund companies place it medium, the dealer, and then quite a few folks can buy that if it's a medium risk, because it is realistically the volatility is a heck of a lot higher than the market, if it is at all. And any investment advisor can sell it. They're working on having the MFDA, maybe with the coming together the two SROs, that'll happen. Again, things that you should keep your eye on is regulations and the new SROs that are coming out. All this stuff is really important in the industry. So here's the AUM of the liquid alts market. You can see back in the COVID crisis there, it didn't do a heck of a lot, but also didn't go down. This is AUM, granted, not return. So the returns probably came off, but people thought they wanted to buy it then. To buy a hedge fund might have taken them 3 to 4 to 5 weeks to get the thing in there. Whereas with the mutual funds, bang, I want to buy it today. Okay, sir, you're in. You're priced at 430. We want the price. The funds will move in 2 days. Done. And then it just continued to grow. And now what we've seen is actually recently the markets have done well, and we hadn't seen a lot of growth in it. But now I think we'll see more because of all of this volatility that we've seen in the markets. And we have the September number. Actually, we have this all this is on our site, CAIA under publications, and you can take a look at the who's offered liquid alts. Is about 38 issuers, I think it is, and 120 different funds. Oh, here it is. Here, yeah, 38 and 120. There you go. So this is the one actually from August. September, sadly, is fairly similar. It grew year over year at the end of the year by 67%, and now is tapered off. So about 40% in equity long short, or equity-based strategies, which kind of makes sense, easy to explain. Credit used to be about 35 or so, it used to be higher, but now we've had multi-strat really make a big move. And market neutral is still relatively few dollars in it, but it's more than before. And I think people think market neutral, they think no return, but actually just means obviously no beta risk or low. So these are the trends in the markets that we've seen. And a lot of this, like I say, has come from the securities commissions. They wanted to set up a vehicle that people could actually buy and have hedge funds or alternative strategies in it. So kudos to them. They were great to work with. I mean, they were actually blew me away, some of the candor that they had. It was pretty amazing. So I would say their regulator's not your friend, but they can be helpful and instrumental. So here is actually this one. Okay, well can I go back? Yeah, this is your typical returns in say liquid alts, as you would expect with this. Your box and whiskers, I think everybody can read it. Your first standard deviation, your mean in the middle, second standard deviation is your whisker, and then you got the outliers, the little dots. It's not as much as the TSX composite because they're shorting. They're doing things to limit the amount of risk in the portfolio. So you're not going to blow the lights out when things are really rocking in the stock market or in the bond market. But when push comes to shove, like in the COVID crisis in 2020, look where all the boxes and whiskers are there. Holy crap, they're killing the TSX composite. All the boxes are above the TSX on the one on the left, and on the right even more. I mean, geez. These things are doing very well, protecting investors' money, still losing money, but doing better than the market, some of them. But, you've got something that actually does well in the downturn, which is where they prove the mettle. So we might talk a bit more about that. But you should just, so when people say hedge funds are risky and they're volatile, they have a volatility, but it's not typically all that high. Some can be, of course. I mean, we wouldn't paint the same brush in. Well, actually, we could have mutual funds. They are very highly correlated, 90-95%. One mutual fund's going to do very similarly in the same category as another one. These ones are very heterogeneous returns, but it's another great way to get returns for investors and protect their portfolio. And there's something that's been used by some of the most sophisticated investors for many, many years. So what can you do? Most people go straight to the fourth line. Started analyst, PM, CIO. That's my path. That's what I'm going to do. Lots of other stuff. If you get your accounting designation, you can go into fund administration and be chief operating officer. You could also be chief compliance officer. Typically, those are legal backgrounds and more accounting. Chief legal officer, if you're in an M&A shop or something like that. Every company in Canada, every asset manager has by law a CCO and a CFO. So those people are required, obviously, very high accounting backgrounds. And then you have, prime broking, which is all the banks getting borrow, providing leverage, different derivatives. Then there's a sexy side of it, capital introduction, where they're trying to get money for their for the funds that are on their platform. So they're introducing them to family offices and investors. Legal, audit, fund admin, highly specialized. You got to go to law school for that. You got to go, get your CPA. We used to call it CA. But those are past due diligence, investor due diligence, which which Ranjan does a ton of, and obviously and Ella's as well, hedge fund portfolio management. And God forbid you go into sales, where the real cheesecake is like maybe you're selling funds or the technology to fund traders or consultants. So there's so many jobs in here. It's so multifaceted, and people move around between these types of roles depending on their skill set and opportunities and kind of where the growth is, which we're going to talk about. I'll send this around. I mean, there's this deck. I think I'll have a link here somewhere. I use Calendly for a lot of stuff, and people will generally meet with you. If you're a student and you're looking to meet, I mean, some people are not so friendly and they won't respond or whatever, or they're just busy, but many people will. We found that we have 3 of them here and they're very busy. And then I always assume that, no one has a job for you. No, wherever you're talking to, there's no chance with that person. That's the way to go in. Then you might be pleasantly surprised, because it's a lot of pressure on somebody if they looking for a job. Oh crap, I don't have a job. I don't know what to do. But if they can put you to somebody who might be hiring, that's fantastic. And start early, like you are maybe right now. And at some point you'll have to think about your brand, because you're never going to leave the industry. Probably not many do. And having a good brand is important. Here's some books. We had lots of other ones be suggested. It's kind of like my list, I guess. So Predator's Ball was my first one. If you didn't know who Mike Milken was, you were kind of an idiot back in the 80s. So I had to read that one. And then going through The Match King, I think, was the best book ever. It's actually the Securities Acts of 33 and 40, and the SEC was set up because of this guy, Ivar Kruger, who did so many crazy things back in the 20s. So you should know where the CDS market came from with Gillian Tett, fantastic reporter from the Financial Times. We can talk more about this later too. This is our stuff. This is all this stuff about us. Okay, so let's get into our panel. I'd like to introduce you, Ella K. And maybe she'll. I always pronounce it correctly. Neil Simons and Ranjan Bhaduri. They're all pros in the industry. They've all got tons of information for you. I've already wasted 20 minutes of your time, sorry, but we're gonna go into these self-intros. We'll start at the top with Ella. Ella, who are you? What have you done? What got you here? And did you know that your job that you're doing right now, or the last few jobs, did you know they existed when you were going to school at Marmara University? Or in high school?
Well, first of all, I'd like to thank James for the amazing speech and the discussion of the hedge fund industry, because that's a big chunk of what I've done has been actually in the hedge fund industry. And thanks to the CFA Society Winnipeg for inviting us for this panel. Okay, so maybe a little snippet of my background, just to give a sense of what I did. So I started out as a trader in Turkey, and I was around I was trading around the Asian crisis. So for those of you math whizzes, if you're trying to calculate my age, I started when I was 5. I was in the industry and trading then. From there, I went to the States, and I actually went through England to work at UBS, then to the States. I did my MBA at Georgetown. And then I worked at Merrill Lynch Credit Derivatives. And from there, I went to Germany to do some project work for European Union. And I moved to Canada roughly 18 years ago. And back then, I didn't know exactly what I wanted to do. And as James said, a hedge fund found me. That was based in New York, and I ended up working for a quant macro CTA. It's a mouthful. So I was working. It's both a managed futures and a macro and a quant and a CTA. I worked for them for 6 years. I was the head of portfolio management, trading, and quant research there. And I then came back to Canada. So I was half Canada, half States, and came back and I looked for a job, not many hedge funds, as James said. So I ended up actually at Mercer. And I did manager due diligence, and I covered quant macro, CTA, multi-asset, and a bunch of other things. And I had my foray into institutional asset management at that time. I worked at CIBC Asset Management on the asset management side, on the currency and asset allocation. Then I went to manage a multi-asset strategies portfolio at WorkSafe Insurance Board, roughly $10 billion portfolio. I then was the deputy CIO for the entity, and I moved to IMCO, and I stayed on the asset allocation and the asset management side. I was overseeing 35 billion. And from there, more recently, I was at BCI, the head of total fund management team. BCI runs $200 billion and manages the assets of British Columbia-based pension plans. And more recently, I've been advising clients and doing more total portfolio approach, risk mitigation, and alternative investment. So to answer James' question, did I know I knew what I was going to do when I was at Marmara in Turkey? Nope, I did not. I had no idea. I knew I was interested in financial stuff, but not really exactly what I was going to do. I didn't actually even know that what institutional asset management was. Let me rephrase that. I didn't know what institutional asset management meant and whether it even existed. I didn't know what I didn't know. All I knew was I was a trader. I thought the whole world was made up of bonds and currencies, which is what I traded. And the entire thing was Turkey, and the Turkish market was the largest and the biggest and the most profound market in the world. And with that, I'll turn it over back to James.
Let's hear from a local boy, Neil. How did you, and you come back to Manitoba every year or so, eh?
That's right. So I can give you the story of kind of how I ended up where I am today. And then as well, yeah, I grew up in Winnipeg and still have a family cottage close to the Ontario-Manitoba border. So I've been using the sort of COVID work remote kind of setup to be able to spend a lot of time out there. So I've been very fortunate to be able to adapt in the COVID situation, where it's had obviously a much larger negative impact on a lot of other people. So very fortunate in terms of my role and the ability to have such a flexible arrangement with working at Picton Mahoney. So how did I get to be portfolio manager at Picton Mahoney? Obviously, starting off doing electrical engineering isn't the most direct path, but obviously anything electrical engineering is very, once you move into, well, bachelor's and as you move into graduate degrees, is very mathematically intense, very quantitative in nature. I worked for a while as a research scientist at a Government of Canada research lab. And I wouldn't say, and I was just kind of like interested in doing other things. I had like a broad range of interests, always had an interest in financial markets. So decided to kind of make a career path adjustment and move into sort of more quantitative finance. That would have been in the sort of around year 2000. I was the second graduating class from the mathematical finance program at U of T. I decided, in talking to people at the industry, I mean, James pointed out that networking is very important. In talking to people at the industry, it's like, well, what steps should I take to make to end up in a spot that can sort of make use of my skill set, which was obviously highly quantitative. I sort of got the advice that, well, these programs, you did have a lot of migration in that time of physics, math, engineering types that were migrating into finance. I chose that program because it would give you the sort of background in finance that you needed, especially quantitative finance. It was 1 year, not a big deal. Didn't take that long, time flew by as you were learning everything. And that's how I ended up in finance. Worked at RBC in a risk management function, which was obviously not managing money at the time, but it was pretty interesting in the sense you had a very good, and risk management functions were a lot smaller then, less regulation and all the rest of it, but you got a very good view of all the trading activities within the bank, because at that time, pre-financial crisis, pre-Dodd-Frank and all that, essentially there were proprietary trading operations, essentially hedge funds running inside the bank's trading operations. So you got a good view of all these strategies. I moved to a firm called Northwater Capital, stayed there for 10 years. That was quite educational. We were involved in all sorts of different businesses. I got exposure to venture capital, exposure to the things that I was doing, or exposure to hedge fund to fund business, exposure to the work that I did in sort of liquid alternatives and what was kind of preamble to some of the stuff that's out there right now. In terms of moving into portfolio management, because I was sort of a research function, and we were doing research to propose to institutional clients to run. As that sort of moved through time, you know, I was the person doing the research, therefore I'm the one who will explain it, therefore I'm the one who's going to implement it. So it's a great sort of way of learning a lot, and that's kind of how I moved into being a portfolio manager. About 5 years ago, switched over to Picton Mahoney. I can run through the details on Picton Mahoney, but you know, roughly one of the larger alternative asset managers in Canada, $9 billion in assets under management. Core skills would be in the equity portfolio construction, whether it's long only, long short, market neutral. We've got a fixed income team that operates in the credit space, and also an arbitrage team that operates in merger arbitrage in the SPAC world. Anyways, my role there is kind of like putting together portfolios using those strategies, in addition to building our own asset allocation models. So for example, you know, everybody hears about 60-40 portfolio models. We have our own kind of take on that, which would be more of a mutual fund sort of implementation. And then we have sort of more, we would call them more robust, more sort of diversified multi-strategy allocations that have many more asset classes and many more strategies, using all of the skill sets that Picton Mahoney had put these together. So that's kind of the big picture of what I'm doing right now and how I got here.
Very cool, thanks. So actually, I had a quick question follow up. So RBC, was that George Main was there and he brought you guys over to Northwater? Is that how you got that job? Or because people always talk about coming out of a larger shop and starting a hedge fund.
Yeah, so I actually ended up at Northwater again through the story of networking.
Yeah.
I had lunch with one of my classmates from one of the mathematical finance program at U of T, and I don't even remember saying this, but I at the time when I had lunch with them, I had mentioned something about always being interested in asset management. And when they were looking to hire someone into the research team, they were looking for someone with the quantitative background, you know, and the friend who was already at Northwater said, hey, I got this friend Neil who said he's got an interest in doing something. And so he called me up and said, hey, we're hiring someone, you want to come over and talk to us? And that's how it all happened. So it was a very it was not, it wasn't
that Freudian slip, eh?
Hey, Neil, was that Taha?
No, it was Sean Zhang.
Chayton? Sorry,
Sean Zhang.
oh, Sean,
Work
yeah,
with Adrian.
absolutely.
So you know, just through you know, staying in touch with my former classmates, always being inquisitive and open and interested in things can lead you down different paths that you may not expect. So, and yeah.
That and a few slip ups when you're speaking. Yeah, got you a job. Fantastic. And you're kind of basically a physicist, like they call it POW, a physicist on Wall Street or a prisoner of Wall Street, because once you leave, you know, the physics side, then it's just, there's so much lucre, obviously, in the hedge fund side. Now, here's another Dr. Ranjan Bhaduri. He's going to talk to us about combinatorics. Combinatorics? Oh my God, I can't even pronounce that. Anyways, he's the smartest guy I know, because he actually thought, well, I'm going to go do my PhD in Hawaii. So let's hear about your path, Ranjan. And of course, as a small child in Hamilton, you probably thought to yourself, for sure, my dad's teaches physics, and I'm going to be a physicist. And there's no chance you're going to go into finance. Or was it always a dream?
Yeah, no, excellent pre-opening. Thank you for that, James. And again, I'll just echo what was stated earlier. I'm very much thank the CFA Society of Winnipeg and CAIA for co-hosting this. And also, you know, I think James deserves a very special thanks, because I've known that he's been doing this for over a decade now.
This is my 90th one, I think. Yeah.
Yeah,
Well, it was Neil's idea back in
Yes.
2011.
Yeah, so I mean, you know, Neil, like, good on you for thinking about it and participating, and James, I know that you've done so much across, you know, now really across the world in terms of
Yeah, I did Geneva as well. Yeah.
these sessions. So, but what you're also going to hear, like what you've already heard from Ella and from Neil, you know, their paths are totally different, and my path is totally different, and every path is going to be unique because each and every one of you in the audience is obviously your own person, right? And you will have your own path. And what, definitely I'll share my path now. But what I also want to do today is sort of give a few insights into two different things. One, how you might go about trying to get a job and the interview piece of it. And then secondly, for young professionals, when you get that job, how can you get on the right track with regards to your career? And you know, the CFA is a fantastic designation, so is the CAIA designation. And I actually have both,
Yeah,
so
you gotta
does
take
Ella,
CAIA.
you know, and so forth. Like, those are really good from an educational perspective and from a, you know, professional perspective. So as James alluded to, I'm from, you know, very near Hamilton, a small town called Dundas. And my late father was a physics professor at McMaster. And I grew up, you know, thinking I was going to be a professor of physics. But I really liked mathematics more, and I was better at math. And I wound up, you know, sort of doing the straight and narrow in mathematics, going to McMaster, did my undergraduate there in mathematics honors, and then went to Waterloo in combinatorics and optimization. It was a 2-year program that I finished in 11 months, just because it was so interesting stuff that I was pretty much studying and thinking about it all the time. And then I got smarter, and I realized mathematics can be done in a warm climate, in a tropical climate. So I went to the University of Hawaii, full scholarship, and it's a great university in mathematics. But I actually experienced my first arbitrage by going to the University of Hawaii. Full disclosure, I didn't even apply to places like Harvard or MIT. Back then Harvard would accept 8 students in their pure mathematics PhD program, and I was so far away from the top 8. Like, so I, you know, like I wouldn't have gotten into any of those Ivy League PhD programs. But it turns out, you know, those same professors who win Fields Medals and Nobel Prizes come to University of Hawaii on their sabbatical, or to stop off for a month or two on their way to Australia or China or Japan. And so I had lots of interaction with some fantastic mathematicians, as well as the faculty there. So I sometimes also joke that I did my retirement before I actually started working. I was really, you know, upon graduation, I was still teaching at the University of Hawaii, teaching at a community college, Kapiolani Community College, that was affiliated with the university. I was part of the East-West Center, which is a think tank on the Asia Pacific Rim region. And it was fantastic, right? Like, I used to, you know, play sports and just love it, but I got more and more interested in business and finance. And I was noticing that the financial mathematics was largely too abstract, that, you know, professors doing it were more concerned about getting a research grant, academic research grant, than real live implementation. And I sort of also felt that the business world was sweeping the mathematical subtleties under the rug. So I swallowed hard, and I decided I'm going to go back to school and do an MBA. At the time, I only applied to McMaster University for 2 reasons. They were the only co-op program at the time, and I felt like it's time I get some real world experience, because up to then, all my jobs were university related or think tank related. And the second reason was my younger sister got in, and I I sort of felt I had missed seeing her grow up a little bit. So much to her chagrin, I decided to become her classmate. And McMaster's MBA program was really good. This was, fall of 1999 when I entered. And so I used to skip class and day trade, take my sister's notes. And then co-op was really good. I had one at BMO, 2 at Scotia Capital, where in Scotia Capital, as part of an elite quant group that provided real-time support to the traders. And we did model design and model vetting. And it was, and I did an academic exchange at the Norwegian School of Management. So I got a lot of good experience. And then, just to tie my story to Neil's a little bit, I was asked by a friend, can I help his friend, a close friend of mine named David Sabatini, asked me if I could help a friend of his, Vikash Jain, who was doing his master's at National University of Singapore, but was from Canada and was wanting to return to Toronto, if I could help him get, some job interviews and so forth. I didn't have that much, of a network at the time. I just had a few co-ops, but I took it seriously, obviously just wanting to help. And I tried to help Vikash. I got him a few interviews here and there, but on his own, he got an interview from Newcastle, which became eventually rebranded itself as Northwater. And he got in. And then when he got in, he found out that they had an opening for a PhD quant. So he got me an interview. And back then, the interview process was pretty intense. There were like 6 rounds of interviews, and some of them were very technical. George Main, was there, Salim Sharif. And I remember, though, I just went in not really knowing what I'm interviewing for, more just trying to interview them as well, like just learn more about the opportunity. And then I accepted a job from them in the fall of 2001 and started January 2002. And it just goes to show a little bit of networking. Networking is very important, but I think it's also very important to be authentic, right? Like in terms of all I was trying to do was a good deed for a friend of a friend. And it led to something good for me, right? Which is often what happens. Like I am very lucky to have a global relationships all around the world, very good ones, very close ones. I can sort of, go into Beijing and just announce that I'm there, and I meet with the CIC or Stockholm and meet with AP4. But a lot of it wasn't like I went about trying to build a network. And I think that a lot of that is actually, I can say that about James as well. A very genuine person, very extensive network, but he'll go out of his way to try to help somebody. And I think that that's something that's very important for everybody to think about, like to make it authentic. And I'll fast forward from Northwater. I left Northwater in June of 2005. So unfortunately, I did not overlap with Neil. And then I went to a small fund of funds, then went to Morgan Stanley in Chicago, where I had the late great Norman Maines as my as the person who hired me. Even that was, it was an amazing opportunity. I got to design customized portfolios of alternatives, and I got to do investment due diligence. So like I had 2 jobs, and it was amongst the best time of my life professionally. But then Norman Maines, through bad politics, got muscled out. And it's tragic that happened, because Norman and I had sort of decided structured credit was, dangerous, and that we should be going to CTAs and commodities. And that was unpopular. Norman got muscled out. The new group that came in, they basically wanted to shut down the Chicago Analyst, like the Chicago unit. And I left after my bonus in beginning of 2007 to start a separate research unit where I got to build my own research team, and that was, the parent company was a managed account platform. And eventually, like, on the one hand, I had tremendous success. On the other hand, it all disappeared very quickly because the parent company imploded. And that brought me back to Canada, where I worked at a boutique shop, again, being chief research officer. And then eventually I decided to form Bodhi Research Group, which I started a little bit more than 5 years ago. And you know, my connection to Ella has been a visiting researcher at Bodhi, you know, so it is a small world. Bodhi Research Group, I do encourage you to check out our website and follow us on LinkedIn and so forth. We have a lot of resources there. But to finally answer James's original question, I had no idea that I was gonna be having, you know, being a small business owner, an entrepreneur, doing what I'm doing. I thought I was gonna be a tenured professor of mathematics, you know, and then after that, I thought, okay, I'm just gonna be working at the same shop for the rest of my career, right? And so, you know, none of you will know exactly what you're going to be doing 10 years from now, and that's part of the adventure, right? So it's more about positioning yourself well and having the right skills and keep on learning. That's going to help your career.
Thanks. Well, let's go to the skills. We can go back to Ella. What's a skill that if someone was in front of you that they display and you go, oh yeah, this person's good? What kind of skills do you look for? I mean, obviously people have their CFA and such. And we had a question, I had one on how do people pass CFA level 1? I just say do all the learning objectives. And I think you didn't have too much trouble with yours. But anyways, we'll get into that. But how about there's skills that you would look for in somebody or traits?
Yeah. I think like, let me just actually take a step back and talk about, you know, before you get in front of someone, what do you need to have? Like if I'm actually sitting on the other side of the table and you're going to be applying to a job, a position that I've opened up, what would I want to see, right? And what are the things that you need to actually have? And just for any of you who's looking to move forward in finance, anything related to finance, be it hedge funds, be it investment banking, anything along those lines. I think, first of all, as Ranjan mentioned, I think there are a bunch of designations that you would need to have. And here, one of the things that we were talking about is obviously this is the CFA Society event, and I'm proud.
Uh-oh, she said her might go out. Neil, you want to pick that up? Talk about.
Yeah, sure. Typically for our firm, which, you know, may or may not be the perfect answer for this particular audience, but usually we do look for someone at kind of the master's level in terms of working in the portfolios alongside us, like the typical analyst that we would hire will have at least, if we're looking for someone sort of straight out of school, we would prefer someone with a master's degree or something fairly quantitative. If they've done a lot of quantitative work and whatever they've done in their background is helpful. Ability to, so yeah, usually a master's level. And then with people with a little more experience, I mean, that can vary depending on what they're doing. Like in terms of all the other spectrum of jobs that are out there, maybe a little different than what we're doing at Picton Mahoney in terms of the other spectrum, then the qualifications will be a little bit different. But for our typical background would be master's degree in something quantitative, and then all the typical programming. Python is obviously a popular one with everybody. Right now, we have a bunch of our infrastructure built in MATLAB. That's very specific to us, but usually some sort of programming dealing with data sets of numbers and good intuition in terms of problem solving.
And Ranjan, what do you look for other than a degree out of Hawaii?
Yeah, I mean, for Bodhi Research Group, I mean, obviously we're pretty small, but if you're going to join a small organization, you do need to be able to wear a few different hats. And so that's very different than if you're joining a very large organization where, you know, you might be hired to do a very specific, you know, assignment and responsibilities. One thing that I'll say is applicable to both is communication skills. And what is extremely important and useful and rare to see is excellent writing skills, editing skills, formatting skills, right? Like that is, you know, invaluable. And there's,
Yeah.
you know, I've had lots of different analysts through the years. I'd say the two best who were writers were like they were just invaluable to me, right? And because there's so much, and then just in general communication, it's so easy to miscommunicate, and especially now where there's a hybrid model at most places, where some places are completely decentralized and so forth. So communication skills is something that is really underestimated, right? Like the quant piece is fantastic, right? But I'm basically looking for the two extremes. Either you better be a top-notch quant, and I'm talking like top notch, right? And I set the bar very high with what I call a quant, right? Or you have those really good written skills, right? And that's, you know, but the written skills can be effective everywhere.
True. Oh, Ella's back.
I am back. Sorry that I got
Cool.
thanks to working virtually, internet being intermittent as it is. Thanks for I don't know exactly where I left off, so I'm just going to take a little step back and repeat again. So I think the first thing I'd be looking for is the designations, or working towards something along those lines. And I think it's not important what designation it is, but it's more about your dedication to learning and developing. So as we discussed, I'm a CFA charter holder for over 20 years, and over 10 years, I got the CAIA charter. And I'm also the co-head for CAIA Toronto, as alongside the other stuff that I mentioned earlier. And I think it just speaks to your commitment to the industry, whether you're in finance, you're doing hedge funds, alternative investments, or you're in investment banking. Regardless, I think the commitment to learning is one of the top things that I look at. And as Ranjan mentioned, I think there's the attitude versus aptitude. Aptitude is important. You don't need to know everything. So if you're sitting across the table from me, I wouldn't be looking for knowing all the nuances and technical details. It's more about, do you have the foundation and the fundamentals to build upon that? So do you have the ability to learn and expand the knowledge? And I think showing the hunger for and curiosity for learning more is probably more important than having all the necessary details for calculating a certain formula, because you can always Google that, but understanding and explaining it is actually more difficult. And then the communication, as Ranjan mentioned, and I would just rephrase it slightly. I think for me, it's presentation skills. So it's not about being able to do PowerPoint presentations, but can you really explain an example or explain a concept in a very simplified format? For junior roles, maybe that's not as important, but even in a basic meeting in a job interview, when you're asked the question, hey, how many flights are leaving from Pearson every day, right? You need to be able to explain, and I've been asked that question actually for LaGuardia.
Oh, yeah.
Which was not exactly as easy as Pearson, because given that Pearson has most of the flights and LaGuardia is New York is one of three. And the way you answer that question and how you present it, and you can explain how you're thinking, is actually more important than what you're thinking. So my suggestion would be, and in addition to what James actually listed as books, I mean, there are a couple that I would definitely recommend. There's one by Amy Cuddy called Presence. And it's about your presentation skills and how you actually get yourself in front of a group of people and bring your boldest self. That would be an important one. And what color is your parachute is another one. And there are a couple other books along the same line. So I think looking and reading those would be a great way to start and present yourself and be there in the moment. This is not really, no interviews about knowing the answer. It's all about how you answer and how you impact the flow of the interview. And a couple of the things I'd be looking at would be the level of emotional intelligence. So are you displaying a lot of emotional intelligence? If you were to ask me this question 15 years ago, maybe I wouldn't have said that, but things have changed quite a bit. So the level of emotional depth that you're showing and how you're thinking in a multifaceted fashion is now the directionally right way of doing business in any industry, particularly in the one that we're talking about, asset management or anything related to finance. So people, as both Ranjan and Neil, as well as James mentioned, a lot of us have actually been in positions that we are in right now, or what we've acquired in the past has not been just because of our background and just our education. Everybody can actually get, and I shouldn't say maybe everybody could get a PhD, which is very unique because Ranjan is very specific in that case, and he's smarter than most of us and all of us actually, probably from my perspective. But you can still acquire a lot of knowledge and go down engineering, math, and whatever is your choice of weapon. But the way you relay and the way you talk and the way you network is going to make all the difference. So I'm going to maybe reiterate what all of us said earlier. One of the most important advice I would give is, like, you need to network. And networking is not so that you find the next job. As James said, you will never actually get a job offer through networking.
Until you do, but yeah.
Yeah. Seen any of it, I've never heard of it, but you will hear of someone who knows someone who will know somebody else who might potentially have a position that might open in the next 5 years or next 5 months or next 5 days. But the point is,
Oh no, she cut out when the point is. Okay, we're gonna remind her when she comes back. How about Neil? We'll go back to you. So you've got your own, I don't know if you still have your Twitter handle, Tweety Neil, but how about social media? Should people reach out to you on Facebook or LinkedIn or Signal or Telegram, or how do you think the kids today, oh my God, should approach old fogies like us? Or someone that might be in a hiring manager position, people who want to talk to you.
Yeah, again, for compliance reasons and whatnot, okay, as we discussed, I don't post anything on, or Ella's back. I don't know if you want to let her get.
But you're on LinkedIn, yeah.
Okay, I'll go for a video. So yeah, so compliance reason, I don't post anything on Twitter. It's a great source of entertainment and information. In fact, there's a lot of good finance stuff out there in the Twitter sphere, or some of it just entertaining, but from my point of view. I am on LinkedIn. I don't check it very often, mostly because I am, LinkedIn's a reasonable network, I would say. The other ones, I will just leave that to, like, not professionally related at all from my perspective. I would think that LinkedIn is probably the most sensible social network in terms of, like, a business style of contacting people. I mean, you can reach out to people. James, you must get hundreds of invitation requests, I can imagine, in your role.
I'm pretty active, yeah.
I would say, but in terms of building a brand for I'm in a unique position in the sense that I'm already a portfolio manager in a highly regulated industry with a very robust compliance process. So, but for others who are just starting out, I mean, Twitter, build yourself a following, put out whatever. If you're interested in markets, start tweeting about whatever you think is interesting going on in markets. You can do the same thing for on LinkedIn. You can put little market observations or whatever it is you want to do. We had one candidate who was already had a job in finance, working in a risk management function, was interested in asset management, and she was just she had a blog where she would post market information and her comments on what she thought was going on in global markets. And when we talk to her, it's interesting that she's doing that. It's not necessarily that we're going to agree, or we're not going to even have a complaint that we disagree or we think she's wrong at a bunch of stuff. That's not the point, because you don't expect her to I mean, it's hard enough for the experienced professionals, you know.
That's called diversity too. Yeah.
It's the effort, the interest, and the branding, I think, is important that you can do there. So I think you can use those mediums for pretty powerful things. I would say probably Twitter, LinkedIn would be the optimal points of trying to do that.
Cool. How about you, Ranjan? Should people visit Dundas and see in person, or is there somewhere in the metasphere where you are?
You know,
You're downtown.
I think, well, I'm in Toronto right now, but it's a situation where, just going back to the networking piece of it, like, your alumni is a very good source, right? Like, and I'll just go back to what happened with me, as I said, dated how I got my first, you know, permanent, like, full-time job in finance. And then I helped a friend get in, Bodhi, who we had done a summer job together at Scotia Capital. He was going to be graduating from the MMF program, and he was looking for a job. And I passed his resume along to the HR person, who was different than the person who had hired me, and he didn't respond. So then I did what I guess today would be called stage an event. So I noticed one late afternoon when the HR person was working, I phoned Bodhi and told him to come over to my office, gave him a tour of the office, and stopped by the HR person, and then Bodhi's charm and did the rest, got him an interview, right? So once Bodhi got in, then he was really a passport to a lot of you know, talented folks like Taha and Sean and other MMF persons. So that you know, what I'm saying is for you at University of Manitoba, if that's where you're from, or whichever university, look at some of your alumni. Like, think about reaching out to some of your alumni. You have one here who's a speaker, and is very often alumni are gonna help, right? Just because, you know, it brings back memories, right? Mm-hmm. Like, and so that's another source. Now, I don't have it right now. I don't know where I misplaced it. I was trying to do a show and tell, but I actually received something very old school recently, which was a letter asking me if that person could have a meeting with me. And this person already has a job, but just wanted to get some insights about the industry. And I was really taken aback. And of course, I'm going to say yes, just because of the uniqueness of getting snail mail, as opposed to
an actual letter. Oh my God!
An actual letter.
An actual
snail mail letter. Now, I thought I was the only one who still did snail mail, because I send postcards from time to time. But yeah, so
that'll set you apart.
That's a you know, you don't want to necessarily do that all the time. It's time consuming, but you know, snail mail is a very interesting approach.
Yeah, I know this guy Tony Kim. He sent me a card, and I remember his name because you guys sent me a card like after we had met. I was like, "What the heck is going on?" But yeah, whatever gets you in people's minds. I mean, that's always good, and it just okay. I don't think Ella's back yet. We gotta get where her point is. Oh my God,
Ella is back.
Okay.
Ella is back.
Oh, she's back. Okay, what's your point? You said then the point is.
I don't know where I left off at. I think I was talking about network. So it seems like my internet connection is stable only for a minute. So
well, you're on a bad network there.
Yeah, I'm just gonna add the network. And I think one thing that I wanted to add there before I lose the connection again is find yourself a mentor and champion. I think that's where we're going with this. One thing that I did not have, and I try to be for a lot of people, is you can only do so many people, but you can only mentor and be a champion for a limited number, but you need to find people who will actually guide you. And this doesn't have to be one person. This is not just about looking for a job. This is for someone to give you an advice, where to look, how to actually get better, how to interview, and give you some unfiltered advice and feedback about how
The
to
straight
move forward.
goods. Yeah.
That's
an awesome idea. So they can find you on LinkedIn. That's good. Okay. Well, let's okay, well, make sure we get close to time. We get 10 minutes. This is good in our preset time. Ranjan, what's the best and most difficult part of your job? It may be travel, because I think you travel about as much as I do, about half a year. But what's the best part? What's most difficult? And we'll try to get a couple minutes each.
Yeah, I mean, I the best part of my job is really the fact that, you know, and this is going to sound a little bit cliche, but just the satisfaction I get when the client is happy, right? And because the work that we do is very customized and very high touch, high value add, and so we're really trying to make the client, you know, really happy. And in this day and age, I feel like a lot of corporations have lost their way, and so, you know, so that's, to me, that's the best part, with, you know, the fact that we have a lot of different kind of work, right? Like because it's so customized. And that might also be the worst part of my job, right? Like, because you can't just cut and paste. Easy, right? Like, it's a very, you know, when you're doing one project for, you know, a premium project for very sophisticated pension, it's a big honor to get that. And it's really interesting work, because, you know, they have a lot of, obviously, abilities internally, and a lot of these groups are on the frontiers of what they're doing. And you know, so that part is really interesting, but we're sort of often doing, you know, different work for different groups. And, you know, so it's not just rinse and repeat, right? And there's and that makes it challenging at times, because we you know, so that's awesome. That's what I would say.
The double-edged sword. Okay, let's go to Ella while she's still here. Most challenging part and best part of your job, or what, I guess your role or whatever you're doing. Yeah.
All right, I'll give 30-second answers to make sure that I give a full answer before I get cut off again. The best part, I think, and this is for all jobs that I've had and currently as well, I feel very humbled and very just very lucky to be meeting very different groups of people that allow me to learn a lot from them. And I think for me, it's very important that I keep learning constantly, and any information that any new stuff that I can absorb, I find it extremely interesting, and I feel it as a developmental motivation from intellectual curiosity perspective. So that's the best part of my job. Everything is new, everything is new information, and I get to meet very smart people and I learn from them. The worst and the most difficult, you know, the Stephen Covey's time management matrix, you know, that you have the 4 quadrants where you have important, non-important, and then urgent and not urgent. The stuff that falls into quadrant 4, the not important and the not urgent, the fact that ends up being the most of the stuff, that is like one of the most difficult stuff, because you actually want to be in the not urgent but important, which is strategic stuff. That's where you want to spend your time. I think most difficult part is ending both in quadrant 3, so the stuff that's not important but urgent, and quadrant 4, not urgent and definitely not important, and that being a big chunk of every daily load is quite a challenge. And I think I don't know anyone who's been able to muster that effectively.
Yeah, I remember reading that book way back, and so the stuff that what you want to do is be working on stuff that's important but not urgent, and then you have plenty of time to mull it around and stuff.
Right.
So I mean, no one's ever going to get it right, I think, but
You're going to be always in quadrant one. You're going to be in the important and urgent stuff, but where you really want to spend your focus is the strategic stuff, which is important but not urgent. But where most people end up is 3, not important but urgent, and then and 4. So and it's emails, anything that's daily communication, a lot of work that other people think is important that you don't think is important. That seems to get in, and everybody has that, a certain percentage. There's no way of escaping that.
It's kind of amazing that a high performer like you would think that you're not doing things very efficiently. So when people think about themselves, like I also think too, like don't beat yourselves up because you're not perfectly where you think you're going to be in your career, and just roll with it sometimes, because you never know what's going to happen.
Exactly.
Neil, best part of your job, math. Worst part of your job. What? No.
Yeah, they're probably right now, they're probably the same thing, in the sense that, running so I'm responsible for making sure the portfolios run every day. I'm obviously the performance one way or another kind of falls back on me as well. So, we are in it for the long run, but you do check the P&L after every day, and you do check the P&L linked to Bloomberg live every 10 minutes. So there's a lot of random of it. Not that matters too much. Most of the portfolio runs systematically, but around the edges, we do make discretionary decisions. We are watching. We have a lot of line items on individual elements that are scattered across the portfolios, regardless of whatever asset class it might be, because they're multi-asset, multi-strategy portfolios. So, we get a lot of information coming at us from research organizations and all the rest of it, which makes it, and a lot of 2020, well, actually for the last 2 years, there's been a lot of global events clearly that have been happening, that have been impacting markets. So that makes it a very, very fascinating and interesting time to be doing what it is that I'm doing. So I particularly enjoy that. It's also, to Ella's point, like being able to keep up with it, focus on the important things, or what you think might be the important things, because tomorrow may inform you that something else was important that you should have been looking at, right? So just keeping up with I find it fascinating, sort of the state of the world right now, and fascinating from an intellectual perspective. I realize that there are people out there that aren't thriving and not doing so well given the circumstances, but interesting from a portfolio management perspective, and also a huge challenge to keep up with. So I like the other bit of advice would be just, read as much as you can about all sorts of events and be as well-rounded as possible.
Yeah. Yeah, you're right. The reading too, like I mentioned those books, that's what I read. I read a ton more, especially when I was in my 20s and 30s. Not so much now. I've kind of become a millennial, but I like those YouTube shorts. But just knowing about the lore of the industry and how things worked and who was doing what. Like I have some quotes from John Mack and stuff, because people that worked at Morgan Stanley at that time, they remember John, and they this is what the guy said, this is how he was, and that creates a connection with the people that you've never met, and that have that are big in the industry too.
Well, I don't want to take it too far off topic, and both Ranjan and Ella may have some comments to add here, but the one interesting thing is like a lot of quantitative type strategies sort of only go back as far as the data exists, and we've done some work that just from an asset allocation perspective, we did this work like maybe 4 years ago, where we went back like over 100 years kind of thing on certain data sets to try and get to see if some of our strategies and see if some of the ideas still held up way back. Whereas like some quantitative equity strategies, if you go back to the 90s, they consider that a long sort of history. I think the last 2 years have caused people to go sort of way back in time. All of a sudden, everybody's interested in what central banks were doing in the 40s and the 50s. All of a sudden, everybody's going back to the World War I and what was going on with central banking back then as well. So there's one interesting book called, I think it's Lords of Finance. It talks about central banking from, I think it's just pre-World War I through, I think it might go through the end of World War II. So that one was an interesting one, just in terms of learning about learning about what central, because, obviously central banking is has been a clear focus of markets for obviously 2022, but also since the pandemic and before that as well. But I'm just saying that sort of knowing these historical precedents and some of the actions, like the fact that they actually did some QE programs back in the Great Depression. Nobody seems to know that now, but they actually did have these instances where they were buying government bonds. So knowing the history of some of these things and what is possible is also, depends what you want to do with your career, but I've found that some of these have been pretty interesting to go back and look at.
Since
And you
we're
get
talking
Japan.
about
Japan's
books,
actually buying common stocks. Like, what the heck? Oh, sorry.
I just wanted to add, since we're talking about the books, I love this whole topic about books. I found them to actually have impacted my career and my decision making. So I would suggest, given that we're talking about finance and a little bit about risk, Against the Gods is one of the books that I would rank up there by Peter Bernstein, and it talks about the history of risk. I mean, to Neil's point, if you're looking to stay in this field and you want to learn, I think that and the other book that really impacted me, I read this when I was working at the hedge fund, and I thought it was like way after the LTCM crisis had happened, but at the time it was really 10 years in. Now it's more like 25 years in. When the Genius Failed.
Yeah, Roger Lowenstein.
I would put those two books in the top 10 of all books that I would recommend for reading. Forget about the job search and what I described before, but if you want to stay in addition to what James has recommended, there's some very top-notch books in there. But these two are When the Genius Failed is a very easy read.
Yeah.
Against the Gods, if you haven't read it, it takes a little bit longer, but I think it's very interesting because it goes all the way back to 1500s about risk.
Yeah, and because us old folks would remember that. I remember it was like August 98, and I was on RBC, and the little ticker said, "Today is a 6 Sigma day in the bond market. This should never happen in the history of the universe." But guess what?
It happened.
It
Well, then you're talking about the
and
black
it'll happen
swan.
again because they're non-normal.
Yeah, that Nicholas Nassim Taleb's Black Swan. That's another one that actually goes right along the same lines.
But he's not a mathematician, is he, Ranjan?
No, he's not. Much like,
But he does have a lot of cool ideas.
it's
Oh,
sort of
He
it's sort
definitely
of
mainstreamed it. Yeah.
yeah. I mean,
think you could.
if you want to learn about randomness, Percy Diaconis, professor of mathematics and statistics at Stanford University, he's the world's best in. Well, I mean, it's very technical, but there's the math in it. No offense to Taleb, but he wouldn't understand it.
Well, what would you think about Benoit Mandelbrot and fractals and such? That's kind of what Nassim puts all of his.
Mandelbrot, brilliant, and did so much excellent work, and some of it's applied in finance. But as Neil will tell you, I'm guessing, it's very different when you have some really elegant mathematical theories and then to translate that into a winning trading strategy over a long run, and then also to implement that's even harder, right? So you could have something that could generate returns, but implementation needs to be really excellent. Just in terms of books, the two that Ella mentioned are fantastic, but if any of you want to email me afterwards, I have a list of books like that. I basically created a reading list for interns and so forth, saying that's something that's pretty interesting. So if you want, feel free to reach out. And just in terms of going back to some career tips, I'm going to try to keep this really quick, but I'll just sort of go through some of the things that I think are important to the audience. The first is ethics and integrity. Never compromise it. Okay, it can it's a slippery slope, and you can you're the easiest. Richard Feynman once said that you're the easiest person to fool is yourself. And so always be asking yourself, what is the right thing to do? And if you feel uncomfortable about something, it's not worth not worth doing, right? And so at the end of the day, the only thing you really have is your own reputation, right? And so you should never do something that is that you're uncomfortable from an ethical integrity perspective. Related to that is never do bad politics. There's a lot of politics in most corporations. Don't partake in bad politics. It's totally fine to do good politics, right? But don't do any bad politics. Be an excellent teammate, right? Communicate really well and give credit where credit is due. First-rate people look for people who are better than them. Second-rate people are insecure and they want third-rate people. And this one is probably the most important in terms of getting noticed by when you start a job, is be reliable, be dependable, be responsible, right? Like even if it's a small task, just the more you can just prove yourself, that's your track record, right? And then your boss or your boss's boss, they're all going to notice that you're reliable, and that inspires confidence, and that gives you more responsibility. And related to that is have positive, energy. There's some people the glass is half full, there's some people the glass is half empty, and then there's other people the glass is half full with cyanide in it, right? So be enthusiastic. I'm not saying wear rose-colored, glasses, but and take pride in your work. It's not just about this is the number of hours I'm doing, or this is my assignment. Even if it's a small assignment, take pride in it, right? Like that's this I learned the hard way, right? At Newcastle Northwater, when the people who hired me left, right? I thought, okay, they're fantastic people. I can't say enough about George Main and Warren Wright. Like I mentioned both of them in my LinkedIn, even to this day. But I thought, okay, maybe now I'll have this might be an opportunity for me to get to do more. And I didn't get to do more, right? Because I didn't have support from above. If you don't have support from above in an organization, you become extremely vulnerable, right? And it's about opportunity, right? I could be the best general manager of the Winnipeg Jets or the Chicago Blackhawks, but I'm not going to get that opportunity.
They're going to hockey. Okay.
Yeah. So, that's you need the support from above. And then remember, your job is to make your boss's life easier, right? Make your boss look good, right? And I would say the following is the biggest reason for failures that I've seen amongst hedge funds over 20 years of doing due diligence and extensive manager research. And it can be applied to business and it can be applied to the personal. And that is complacency and hubris are the enemies, right? So keep learning, as Ella and Neil stated. Professional designations, the CFA, is a fantastic one. Work ethic, there's no substitute for hard work, right? At the same time, you want life-work balance, and I always say the life first. If an organization says work-life balance, right away they're just giving lip service.
Ranjan, I only work from 7 to 7. It's just a half day. It's a 12 hours.
Yeah, well, I mean, James is a guy who's he loves his job, and and so it shows. I don't think it's even some of the time it's not even work for him, but if you get to that stage, you're very fortunate. But and understand the business, right? Don't, of course, do your job, and that's the most highest priority. Get those delivered, but understand how everything fits together, how everything works, because it'll make you so much better even at your own job. And realize that in the business world, it's very different. Again, I learned this the hard way. People only care about two things in the business world, right? I don't know if anybody in the audience wants to take a stab at what the two things are.
Money and more money.
No. Almost, yeah. They care about how much money does it make me? So absolutely, that's one of them. And the second is, how does it make my life easier?
Yeah.
Right. And you better be doing one of those two things. So, Neil is a portfolio manager. He's making you money, right? In a Bodhi research group, we don't trade. We better be making your life easier. And so but people hire you for only two reasons. When you're looking for a job, nobody's entitled to a job. You're only getting hired for one of two reasons.
Be an asset on day one.
Well, I would say the two reasons, and again, I don't want to be cynical, and this is just sort of factual, actually. It's not really cynical, but it's either because the person doesn't want to do the job themselves, or they don't know how to do it themselves, right? And that's really, one of the two reasons. And we talked about proactive communication, and then just
sorry, we gotta wrap up pretty here.
Last one, Nike principle, just do it, right?
Just do it. Love it.
Done. So,
all right.
yeah.
So here's the bonus question, which everyone knows about, and I've heard some various answers. So I had one time I did this, and so what tell us something about yourself that no one has heard so far and would surprise the whole group. I did this once in Geneva, and I said, this guy I know, Mike, he's actually was an ordained internet ordained priest, and he married his brother to his partner. And I was like, whoa, and then the guy at the end of my panel said, hey, I'm an internet ordained priest too. So I don't know if any of you are of our Ranjan or Neil or Ella, but my thing was I'm actually an introvert. So go figure that out. And here I am on sitting in a room by myself talking to my screen. So let's start with, I know who really wants to talk is Neil. Neil, what's something about you that we don't know as your deepest, darkest secret? It's going to be safe here. Don't worry.
Well, this is going on YouTube. You said.
That's true.
you may have.
You're a biker. Oh, geez. Okay.
May be obvious, but I have a slight obsession with being outside, and I do a lot of cycling. It's kind of a lame answer, but that might be all you get for now.
That's okay. We'll get a director's cut version with the real one. Ella.
So you can't see where I am right now, but I'm up north in the cottage country in Ontario. So connected to that is I'm an avid snowboarder, and I used to play table tennis professionally when I was in high school, and I knit. And I knit stuff.
Those are three very different things.
That can be wearable.
You can do them all at once. That's awesome.
That I knit. My husband wears the hats I've knitted, and they're still haven't fallen apart. So
you can knit some Casa socks for us. Thanks. And Ranjan, something we haven't heard.
We'll
you said
this,
a lot.
This was the letter that I got that I mentioned earlier about somebody.
You got it.
But I don't know how much of a secret it is. Probably none of you know it, at least. But if you Google me, you'll see I play a mean game of bridge. I mean, pretty boring life, but I have I don't have anything in my background check beyond I'm not a bad bridge player.
God, so. Engineering and bridge. Look at that. They go right together, aren't they? Thanks a lot, guys. This has been awesome. If people have questions, my email's in there. I've been putting a bunch of stuff in the chat with resources and such. And we're at the Hargrave Street Market tonight from 5 to 7. Just drop by or send me an email. Erica, thanks for setting this up. It's fantastic. You and Eva and Sid and everybody. I'll give it to you now.
Yeah. Thank you also, Ranjan, Ella, Neil, and James, of course, for moderating this panel and for taking some time out of your busy schedules today to share some of your knowledge, your insights, your experiences, and some career tips for everyone. This has been really a very informative event, and I'm sure all of our participants feel the same way. So as a token of gratitude for being here today, CFA Society Winnipeg will be making a donation to a local charity on your behalf. And also, as James mentioned earlier, CASA is hosting an in-person social at Hargrave Street Market tonight from 5 to 7 p.m. So if any one of you would like to come, you can email James to RSVP. Again, thank you so much to our panelists, James, and to everyone here for joining this event. We look forward to seeing you all at all our upcoming events. Enjoy the rest of your day. Thank you.
Very good. Thanks, everybody.
Everybody.
Thank you.
Thank you. Bye, everyone.
Bye-bye.